Now we're going to step or kick the hornet's nest because there's a lot of data going around looking at the crude exports and how crude exports are down, which is true. And again, like the data supports that. But one of the things that we continue to try to point out is it's not just about oil. You know, it is a market that has crude, it has refined products which are made from crude. So if you're someone who has this opportunity or this ability to export product, well, why am I exporting oil? I mean, the product is paying way more on a margin basis than the crude. So sure, I'm going to reduce my oil exports and I'm going to increase my product exports because I want to capture the best margin possible. And so while some people are talking about, oh, look at how far down Russian crude exports are, it's like, but nobody's talking about, well, let's look how high Russian diesel exports are. You know, that's a meaningful number. Like you have to look at both sides because they're increasing run rates, so they're absorbing more crude into their refiners and they're exporting more product. But remember, they only have so many docks, they only have so much bandwidth at their coast. So you typically have to choose one or the other. And so they're choosing to export the higher value product, which is making more money in the market. So I guess I want to make sure that we balance that approach when we're looking at, you know, how to evaluate this market. So we're going to show diesel exports from China. This is showing what happened in July, what has happened since. So diesel exports are at a 4-month high. China ships more diesel as home demand continues to be sluggish. For anybody that has been following us, again, anybody who's bullish China, I don't really get it. I get that you're hoping or expecting that the Chinese government does some massive stimulus. But again, my pushback is they've been doing stimulus. Like it hasn't worked. It won't work. So I guess I don't see the huge amount of, I don't know. I just don't see China seeing a lot of big economic growth. China's imports of crude exceeded 12 million barrels a day in May and reached a 3-year high in June, prompting bullish optimism. But however, a lot of that oil has been stockpiled as buyers took advantage of lower prices to replenish inventories and especially as local demand disappointed. So when you look at estimates, you can use Kepler, you can use Vortexa, which is this chart. You know, realistically, they have over 1.1 billion barrels of oil in stock in stockpiles. So since March, they've gone from 900 million to 1 billion. So they've increased 100 million barrels in storage, essentially in the last 4.5 months, 5 months. So it's like, well, I don't. At any time, they could turn around and say, yeah, prices are too high. We're not going to buy that level of crude anymore. And we're going to start drawing down. And again, they will never stop importing all of it. That is not something that will happen. Because a lot of times people will look at it and say, well, there's only 90 days of crude. It's like, well, yes, if the world fell to hell in a handbasket and there was no crude available, sure, that it is 90 days, but that wouldn't happen. You know, there's always going to be some sort of crude that's floating in the market, so you're never taking imports to zero. So this is something that, again, is going to eat into the market when they start doing that. And as we were saying, we expected to see China entering the market because why wouldn't you? The ARB is fantastic. You would be crazy to try to not collapse that and capture that margin. So then when you look at seaborne crude from Russia, so yes, seaborne crude was down in July. We said that was going to happen. We've been showing this chart every single week. But look at the end of July. You had a spike. You know, so you were a bit lower, and now we're at about 3.2 million barrels a day. But when you look at the weekly flows, this is giving you an idea of where things are. But even as crude price, now you're starting to get a little bit of an increase back above 3 million barrels. And Johan saw their offer price go from $1.75 on Tuesday to $1. So you're starting to see, again, a little bit of a decline in the physical market. It's still $1 over dated Brent. We are not saying it's going back to even or below. It's going to stay at a premium, but the premiums are waning. And it's because you're starting to get some of this balance act. And this is why it's important to look at this specific chart. This is looking at Russia. As you can see, and if you want it, the other chart, just hit me on Twitter. I can give you the zoomed in version. You can see that as we did get that drop in July, well, we had 400,000 barrels a day of additional diesel going into the market. So you had crude coming down, and you had diesel and refined products ramping up. Now, what we have, as you can see that last data point, we have oil exports going up. You have refined product exports going down. You have to look at both, and that's why it's dishonest to not look at both. And that's where it's like we tried, you want to say, as I joked before, breaker of narratives, whatever. It's like we're looking at the way the market should look at the energy markets as a dual system. There's crude, there's refined products. You have to look at both together because, for an example, if gasoline and distillate stock storage was exploding and setting new records at the high level, well, are you going to need more oil? Well, no. So you'll reduce runs and that will reduce oil demand. And then vice versa. It's like, well, if oil prices are low and storage is really low, well, then you'll see some of that buildup. And that's why we've been, and you might say, it's like, well, Mark, look at distillate. Yes, that is why I am saying crude prices are not collapsing. We are not saying this because, oh, well, once you factor in, Russian refined product exports, therefore Brent should be 70. No, we're just saying it shouldn't be 85. Should it be 82? Sure. Could it be 80? Fine. We are not saying this, therefore this is 65. There is still not enough distillated storage. There is still not enough, heavy and medium slate crude. There needs to be an adjustment, and it's just showing that you can't just say, Russian exports decline, therefore price goes up. You should say Russian oil exports go down. Where are diesel exports? Oh, they're down too. Okay, this is a different story. But if they're just flowing back and forth, it again eats into things. So here, when we look at what has happened with Chinese flow, here you can see that there was a big spike. That spike has come down. So you had some sizable bumps. It is normalized a bit. This is why we're going to want to keep looking at this. And I apologize for not showing the updated chart, but it's just right back to where it started. So it didn't drop back off, but again, you saw some spikes. Now it's coming back down, but it's going to be important to see what happens in August because we've actually started to see some refinery run rates pick up. So again, as those run rates pick up, and gasoline demand is abysmal, and even in comparison to what we thought, it's low. It's below what we were expecting, and I would not call myself bullish on demand. So again, this is below our expectations. And again, the manufacturing side continues to be in contraction. New export orders, new orders, all things we're going to cover tomorrow, were way down, which again points to more of these problems. Then when you look at Saudi overseas, when you look at crude shipments fell to their lowest since September of 2021. This was expected given some of those reductions. We did see a slowdown in general, but even though we saw a slowdown, there's now a record amount, or I should say outside of 2016, a record amount of floating storage because nobody wants them. Because, well, why would I buy this crude at this huge premium when I could go buy even U.S. crude is cheaper at this point. Urals are essentially free in comparison, and again, so you're seeing this pressure, but this did see a drop. Observed crude shipments from Saudi Arabia fell in July, dropping to their lowest in almost 2 years. Flows were about 6.33 million barrels a day in July. Saudi and its partners met in Vienna. They took things lower. That will take its target for those 2 months to 8.978. But again, we've actually seen them not reach fully. Like they should actually be lower, but there's always a certain give and take, especially because some of this is consumed locally. So now when we look at global crude oil in the water, we're still staying at the highs just because, yes, there's just more crude out there because of floating storage, because of Russia. So again, that makes sense. And as we've been saying, we're just going to go sideways from here. We're not going to go up much. We're not going to go down much. We're just going to stay within this band. And as you can see, we're moving towards the top of the band, then we'll move back down and not have too much fluctuation. Crude oil in transit. So we should see a drop in crude oil in floating storage because it's moving into transit. And as we're saying, it's just going to be that ebb and flow when you're backing it up. And so it's no surprise to see some of this coming down. But you can see that floating storage isn't coming down to the same degree that things have been moved into motion. And that's because we're getting some sizable builds in product that is both in the Middle East as well as West Africa. And here's the Middle East, like this, where the Middle East has a 2023 record for floating storage. You can see the only time it was higher was in 2016. Based on the pricing, unless and there are estimates that the Saudis going to raise OSPs again, you're not going to see people buying crude. You're just going to see this back and forth. People will opt for Johan. They'll opt for Latin America. They'll opt for the U.S. They'll buy as much product as they can from Russia as long as their refiners can handle it. And this is again going to leave more of this product here. Now, when you look at the spreads, this again shows you just the kind of that backdrop between naphtha being a bigger piece for the topping for the gasoline side, the octane side, where fuel oil, it's just we don't have enough heavy crude. You're still going to see this bifurcation, and as long as Saudi continues what they're doing, you're going to continue to see this stay very wide without really a collapse. And then the petchem doesn't want it because on a propane level, LPG is still cheap, still well affordable versus naphtha. So it's not like the petchem is a saving grace. So again, you're going to see more of this remaining here. The U.S. Has seen a bit of an increase in their estimated exports. Again, we're still staying at that 3.7 to 3.8 million barrel a day export level. When you look at spreads, crack spreads, again, it's great. We did not expect to see $30 in the disti market in Asia, and here we are. So again, the costs have gone up as we talked about with heavy crudes, with cost overall. But again, you're still going to take advantage of it. I mean, this is why Russia's exporting more product. You're seeing China export more product. Why wouldn't you try to capture that, given where we are on these different spread levels? When you look at Dubai versus Brent, you're seeing more and more of these discounts get filtered into the Middle East. Dubai is going, and Murbain should start to take some of that additional market share from Saudi because the discounts continue to grow. This is something that is also kind of showing you that there's a bit of that disconnect in the market where the physical market's saying one thing, financial markets are showing another. Realistically, I would say the financial markets are catching up a bit to the physical market, just given where some of the balancing act is. Asia floating storage is back to where it was in 2022. We expect it to kind of split the average between 22 and 21. So we will get a little bit of a bump, but again, you're kind of seeing these things staying a bit elevated, but you did get a sizable conversion back. But when you look at what has been purchased so far, China super tanker crude imports remain elevated. You still see a lot of this coming through. We will likely take out the 2020 high because they're taking advantage of Iranian crude. They're still taking advantage of Russian crude, and they're still continuing to, but at any point in time, as we saw in 2020, they can just disappear. We've seen it happen. It normally happens at the end of, middle of July onward. It could happen here. We don't know what the quote unquote magic number is in their heads for storage. So this is going to be one to watch. And as this comes down, we would expect to see more softness in the physical market. But on a positive, we finally saw some of the teapots waking up. They're operating at 62.3%. That's an increase of almost just under, about 2.8 I think 2.6%. So they should be at about 64.9, almost 65. So again, kind of catching up. But even as they ramp up, they're ramping into a really sluggish and really disappointing domestic market, but they see the opportunity abroad. So why would you not increase runs? Because realistically, you're already buying discounted crude, Iranian and Russian. So I have discounted oil, and I can then crack it, create product that I can sell under my flag, which is allowed in the market. So I can buy cheap crude, crack it into diesel, and then sell it at the going rate, which is well above where I bought my crude. It's like I would do that 10 out of 10 times. And so that's why we should see that ramp back up. And this is just talking about some of the softness. For those that remember a couple weeks ago when we had some of that flatlining, we thought it was going to go sideways and be about 15-20% better than better than 2022. And here you're seeing it's tracking. There's obviously flooding that is impacting it, but flooding is localized. And as you can see, we should be a bit better than where we are, but things are sluggish because remember, 22, you still had zero COVID, you still had restrictions, and yet we're still seeing some sizable drop. Which is why when you start looking at, again, where are you going to source crude outside of the Middle East, it should be West Africa. And West African crudes, we're setting a new seasonally adjusted all-time high for crude sitting in floating storage. Yes, it has come down, but it's not clearing quickly. You've had deferrals, you've had more deferrals, you've had exports get taken down, and yet the reason why you're taking down loading schedules is because you need to clear what's there. So again, I just think that this is pointing to a bit more of a problem. U.S. crude exports, gasoline was down 177,000 barrels a day. That brought that's still above the 5-year average. We do see a bit more pressure on the gasoline side. Distillate had an increase of 3,000 barrels. That's still below the 5-year. We do see some of that upside again, as we talked about with the margins. When you look at propylene down 363,000 barrels, but again, still well above the 5-year. That's going to maintain. And then crude oil exports went from 4.59 to 5.28. Again, that's a bit of that makeup number that we were talking about. That doesn't make sense. It's just a matter of the filings. So we will see some of that reverse next week, which again will bring some of that draw into kind of connection. Gasoline, it's still going to stay above the 5-year, but trend a bit closer just because, the market looks really good internally. You're going to try to sell to the cheapest level, to where you'll make the most money and has the cheapest supply cost. So again, that's why we think this will trend a bit lower as well. When you look at distillate, again, this will trend back up just given where the ARB is between the two. So that'll support exports for the next few weeks. And then when you look at oil exports, again, lumpy, but they're still going to stay strong, as we talked about, something close to 3.7, 3.8. Propylene dropped down, still going to stay strong. Ethane exports, something similar when we look at the broader market. Now, when we shift into Fujairah, as we were saying, we expected a sizable increase in light distillates. We got it. When you look at total oil products, they came in at 19.72 million barrels. That's an increase of 953,000. The stock saw a rise for light distillates and then a smaller drop for middle and heavy. But again, light was sizable because the increase was 1.349 million, bringing us to 7.58. East of Suez gas oil complex softened as there's still more Chinese product coming in, and the demand just isn't there. Some of the market participants expect that Chinese gasoline exports could rise on the back of a possible drop in domestic demand, which we talked about, especially as the heavy flooding happens. And then when you look at the rise in Singapore's gasoline imports came despite inflows from China declining. So there's a back and forth, but realistically, there's not a lot of demand. Prices are going up, more product is coming to market, and we do see softness in the gasoline market. Middle distillate, however, slightly different. Their total storage fell 166,000 barrels to 2.645. East of Suez, ultra low sulfur diesel market started the new trading week a bit stronger. Healthy demand, seeing some of those pieces. Gas oil outflows from China are expected to pull back a bit to 600,000 metric tons in August compared with the previous estimates of about 1 million. So again, kind of that balancing act. We do see that creeping back up. So industry sources said they were expecting China to issue 10 million ton of export quotas for clean products and another 5 million of export quotas of fuel oil in its third batch. That's going to be an interesting one to see, and that'll increase some of the flows. So that'll be one to watch as we head into that third batch. Heavy resid fell 230,000 barrels. It still stands at about 9.49. Spot trading activity was fairly stable. Suppliers reported poor demand as you see some of these different shifts. So we don't see too much of a benefit. So realistically, we do see some builds coming. It's just going to be based on timing, but middle distillate continues to be at a very low point. When you look at Brent, still sitting in backwardation, obviously it's getting a bit lower. You had that bigger run up. Now you're starting to see that slow back down. That's something that we do think is going to come under more pressure. When you look at the flows, Norway is pushing back up. Nigeria is a bit elevated as you go into September. And it's more because there's deferrals. So it's not because there's more production. It's just some of the cargoes are getting kicked out of August. So realistically, things are fairly stable, as you can see. July is interesting because when you look at the total numbers for July from Russia, this is coming in at 4.07. So it's important to put all of this in perspective when you're looking at the different pieces. Obviously it's below where it has been, but it puts it into where, yes, there was about, and as we talked about last week, we saw about 400,000 barrels a day less of Russian exports, but we saw an increase of about 250,000 to 300,000 barrels of distillate a day. So again, that net matters when you're looking at the broader picture. When we look at crude, small draw, but as you can see, it's still very elevated. We're just below where we were in 2019. And as we talked about, there's a bigger slowdown in refining activity, and that's going to keep this crude elevated, especially because there's a lot of crude in floating storage right now, which we'll talk about in a minute. Gasoline had a drop of 50. Gas oil had an increase of 64. But even as the storage of gas oil has increased, you can still see it's well below normal. We do see, again, them attracting more over the next few weeks, while gasoline is right at where it was in 2020 as well as 2022. There's going to be more exports, and depending on production, because production has slowed, and if exports stay at this level, we should see this start to drop back down, but you can still see how elevated it is against historics. Fuel oil has shifted back to a seasonally adjusted all-time high. They're going to start blending. They're going to do things with it because that west to east arb, it just isn't there, which is keeping that stranded. As we talked about in Singapore, we expected builds to bring us closer to that 19 or so average, and it was really driven by light distillates. As we were saying, light distillates are going to bounce back up, and it's going to work its way back to where we were in 2020, and that's not a good thing. And it's just because, again, the arb was there. It makes sense to make distillate. When you make distillate, when you make diesel, you inherently make gasoline, and you're going to see this continue to build. But middle distillates, again, we're now below where we were in 2022. You have to go back, almost 29, looking at the 29-year cycle to see how low we are. Again, this is going to attract product. This is why Russia is exporting more. This is why China is going to export more. Why would you not capture that margin? Because storage is so low on the middle distillate side. Even as demand diminishes, with slowing manufacturing, slowing exports, slowing trucking, slowing everything on an economic level, your storage is low. There is still money to be made. And then on the resid side, we're back above that average. As we said, we're going to kind of live around this average area, especially given where we sit in the on the floating storage side. North Sea creeping a bit higher. Again, this is why prices started elevated on a physical level in terms of diffs. That's now slowly working its way back down. And then when you look at European floating storage, you can see that big spike, back to where we were in 2020. This is why there's a lot of crude floating around there. And it's just a matter of at what price is that going to come in? When is that floating storage going to come on shore, especially given where we are on the demand side, which is weakening, which is going to keep Europe fairly flush with crude in the near term. So that's what we have for you today. If you have any questions, please feel free to reach out, whether it be on YouTube, on Twitter. We'd love to hear from you. And thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.